Take a look at your market news now. Asian markets mostly rose on Tuesday, but traders remain on edge after US President Donald Trump warned that he will ramp up his trade war with China if he does not reach a deal with Chinese leader Xi Jinping at upcoming talks. With the economic superpowers in the middle of an increasingly bitter standoff, there are hopes that the two leaders will be able to work out an agreement that brings them back from the brink of a tariffs row that threatens to dent global growth. A mixed picture for Asian trading saw the Nikkei gain 0.6% to end at 21,952 points. Hong Kong's Hang Seng dipped marginally, ending the day at 26,285 points, while the Shanghai Composite was unmoved by close. Wall Street bounced back on Monday as bargain hunters returned with force after last week's sell-off, and expectations of a flurry of holiday cyber spending drove up shares of retailers. All three indexes posted their biggest percentage gains in nearly 3 weeks. The S&P 500 and the Dow Jones Industrial Average rose about 1.5%, while the Nasdaq advanced more than 2%. Now for more on the markets, we cross to Arabile Gumede, who's standing by at the Johannesburg Stock Exchange. Good afternoon, Arabile. What's happening in the markets today?
Yeah, good afternoon, Nzinga. Well, it started off a fairly okay day, but we saw the markets then filter out that gain and now sitting in negative territory. But we have had some sense of news as well come out. Of course, there has been a lot of earnings news, which we'll unpack in a moment or two. But first and foremost, that business confidence falling to its lowest level since the second quarter of 2017. That's particularly when the finance minister, Pravin Gordhan, at the time was removed by then President Jacob Zuma and of course brought in Malusi Gigaba then as the finance minister. So clear evidence there that South Africa's confidence levels in that quarter was certainly not the levels that we would have liked to have seen them at. But despite that, let's take a look at how local and European markets are faring. Around 1/3% lost on the JSE thus far. So let's chat to Shaun Morrison from IG South Africa. Shaun, thank you so much for the time this afternoon. Let's unpack this market picture. 1/3% or so. Monday was a good day generally, so we thought perhaps it might filter through to today. Clearly not.
No, it seems to be the trend in our marketplace at the moment that we struggle to extend gains or continue gains. The theme is still the same themes. It's all about that trade war narrative. Trump's now said that he expects to increase tariffs on 200 billion worth of Chinese imports to 25% from 10%. And that's obviously on the eve of the G20 meetings where there's optimism. There was some optimism relating to his talks with the Chinese premier.
Yeah, there was that, and of course Brexit is going to continue to be a thorn in the trading desk, won't it?
And Trump, I think, has also made some comments relating to Brexit recently as well, saying that it's going to make it harder for him to do business with the regions as well. So, markets move quite often to tweets. And
so where do you then look towards? Where do you try to, perhaps wipe out all the noise and try to focus in? Where would you go, perhaps, if there was a particular sector or segment that perhaps is your favorite right now?
It's a tricky one. They say in the short term, the market is a voting game, and what we do is we focus on the short-term trading game. So we take each day as it comes. We look for key trends within the marketplace. Unfortunately, in the market, a lot of SA Inc., and that is in bear market territory. It's in downtrends. So we'd like to see some indications of reversals of those trends rather than trying to bottom pick those markets. So I think it's still a matter of waiting. I think keeping a bit of cash on hand is, for the real opportunities is maybe not a bad idea.
Yeah. Speaking of cash on hand, before we touch on the other set of earnings, but one that was of keen interest was actually African Bank. I'm sorry if I can start off with that one. They seem to have had what seems to be a better set of earnings than some would have thought in some cases. The likes of their savings and investment up quite substantially as well. Their retail side quite a bit as well. A good set of earnings, would you say?
Yeah, African Bank is I think if the base of comparison comes from, well, there's a low base of comparison originally. We know what happened with African Bank historically, but strong financial performance. That retail deposit book has really grown. The credit risk seems to have declined somewhat, or stabilized, probably a better way of putting it. So looking much better. They also gave out that news. They're going to start their digital experience, their online app, for try and move some of that revenue towards transactional banking rather than just being stuck at sort of insurance and loan growth.
Yeah, clearly Basani Maluleka doing a better job there than perhaps some would have thought. She is going to be interviewed by my colleague Diabo Seto as well, so we'll hopefully get some of her thoughts too. It will certainly, won't it? Another sort of earnings to have come out today, Nampak. Their sort of earnings would be quite interesting, one would say. Yes, there were a few growth areas, but headline earnings also not necessarily doing too great.
Yeah, so the results that have been coming out haven't been too great, like you correctly said. The group revenue was actually down marginally. Operating profit was up 7%. It does look like the core divisions did do slightly better than expected. The major impacts coming from that glass division. Yeah. I think the profit was down something like 60% in the glass. But there's a 665 million impairment, I think, related to that. And they are looking at disposing of that part of the business next year.
Yeah, so hopefully that will be a great benefit for them, actually. Yeah. Let's move on very quickly to the rand and even perhaps the oil price. The rand stabilizing, so to speak, at around 13.85 or so. Brent prices below $60 a barrel, or maybe just on that mark even. That's really good for local consumers, right? But yes. If you're an oil exporting nation, that Brent price at $60 isn't really great.
Yeah, I was looking earlier on. I think Brent crude and WTI are both more than 30% off the highs, and those highs went so long ago. That was October. Yeah. So it's been quite a sharp fall. The sort of sanctioned Iran narrative has shifted towards a global excessive supply in the marketplace again. Yeah. I'll be interested to see. We've started a little bit of a rebound today. I'd like to see whether there is some traction there. We do have an OPEC meeting on the 6th of December again, and the Saudis are definitely, or they're asking for a 1.4 million barrel a day cut. So I think global production sits at 100 million barrels per day. So they are asking for a relatively large cut.
And that could hurt the price then. Really well for us.
Yeah, but it could spike it's all sentiment driven. So yeah, initially I think it could have maybe stage a little bit more of a rebound. But I think oil price has yet to still find that equilibrium. Just as everyone's talking about it going to 100, it's back at 60.
Yeah.
So
great. A little ambitious perhaps to spike it towards that $100 a barrel mark. The price of gold as well, $1,223 a fine ounce. As we said, 13.85 or so for a rand against the US dollar. Shaun Morrison joining us now from IG as we had unpacked the market picture on that front. As I said, my colleague Diabo Seto does catch up with the CEO of African Bank, Basani Maluleka, and we'll hopefully get that interview to you as well. Some interesting thoughts to come out of that bank, surely, and we'll get to the grips of that a little bit later on. That's where the buck stops this afternoon. Nzinga joins you right after the short break. Do stay tuned.